We good? Okay. Hi, so welcome to the stream today. Really excited for having you on the stream as we continue with our discussion for the for the July 2025 examination. And you must get yourself prepared pretty soon. The March 2025 results is going to be out, and we're hoping for the best as we wait for the result. And we want to share our thought on a couple of things that you need to understand and how you can put yourself in the position to be able to pass the examination. What we are doing on the on the session today is to walk you through how you can study some of the key subjects in order for you to really put yourself in the position to pass the examination. Because if you understand the structure of the syllabus, the way the topics are knitted together, the subject combination and all that, that is going to put you in the position to be able to then go into the exam hall, write the exam with confidence, and most importantly, pass the examination. And that is why we wanted to record this session together so that we will really understand what it is that we have to do when it comes to the examination. Now, there are a couple of updates as well that I'll be giving you as we continue with the discussion and as we put ourselves in the position to pass the examination. I see some of you guys joining. You are welcome. If there are any questions, you put it in the comment section or the chat box for me. I'm going to be providing with some answers in respect of the questions that you have so that you can really put yourself in the position to pass the examination. So a few things real quick and we get into the discussion. So July 2025, right? It's going to be coming up pretty soon for the examination. And we've shared our thoughts on a few things that you need to be mindful of, how you need to study, how you can prepare your study plan, and all that. And so what we want to get ourselves into is to take them subject by subject and now share our thoughts on the various things that we need to understand generally when it comes to dealing with the various specific subject issues for us to put ourselves in the position to ultimately pass the examination. So I'm going to be walking through the subjects one after the other, and whatever subject you are writing, you can put it in the comment section or the chat box for me. Then I'm going to be taking time and then go through that as well in that particular case. So let me start the discussion from public sector accounting and finance. Now, the public sector accounting paper in the new syllabus is an interesting paper that is structured in such a manner to ensure that students put themselves in the position to go into the exam or and pass the examination, but most importantly, be equipped to be able to apply what has to be applied in order for them to pass the examination. Now, for the most part, what is going to be happening is that there are some key areas that we need to be mindful of. So let's look at the thematic topics in public sector accounting and finance. We are going to be starting first from the A aspect of the syllabus, and that is going to be budgeting or the public financial management cycle. All right. So public financial management cycle. Management cycle. And public financial public expenditure and financial accountability framework, PIFA. We're going to be getting into all of these, don't worry. Second, we are going to be dealing with the IPSAS, that is the International Public Sector Accounting Standards. Third, we're going to be getting excited into preparation of financial statement. Okay. Fourth, we're going to be looking at the issue in respect of evaluation of financial statement. Evaluation of financial statement. And then 5, we're going to be getting excited into, governance in the public sector. Okay, governance in the public sector. Then certainly the issue about the regulatory framework in that particular case. Okay, and the regulatory framework. And so when it comes to public sector accounting and finance, these are the thematic areas. In other words, the 20 marks question that will be coming in the exam hall when it comes to public sector accounting and finance, these are the things that the examiner is going to be asking questions on. And so the question we then have to ask ourselves is, how do we structure ourselves? How is the syllabus weaved? How are we supposed to study so that we go into the exam hall, write the exam with confidence, and most importantly, pass the examination? As always, in the public sector, you are going to be opening up with some key introductory issues. So there are some key introductory topics, or sometimes what I refer to as discussions, that you have to be mindful of. Now, those introductory topics or discussions can actually be found in the D aspect of the syllabus, which is the governance in public sector and regulatory framework. And so this is where you are going to be sharing your thoughts, and you must know about the following issues. You must know the issues in respect of the regulatory framework. Okay? The regulatory framework. And here, this is where you are talking about qualitative characteristics of financial statement, elements of financial statement, objectives of financial statement, measurement basis. All of those things are covered under the regulatory framework in that particular case. So that's an introductory area. You must understand these, because that is where we begin the journey from, for the most part, in that regard. Then certainly you are going to be coming to, still in the introductory aspect, some other issues, such as what I mentioned earlier. Who are the users of financial statements? Okay, various types of public sector institutes, how governments control public sector institutions. All those things are going to be part of there. Then we come to revenue management and expenditure control. This is a topic you must understand as a public sector accounting and finance student. Now, it is not directly in the syllabus, because if you flip through the syllabus for public sector, it's not directly there, but it is something you need to understand to know the various sources of revenue to the central government, to the local government, and all of those things, and also to the other covered entities. Then you must know the expenditure items and the way you recognize all of these things as well. So regulatory framework, the other issues, certainly dealing with revenue management and expenditure control. Then you come to the role of key public officers and the governance issues. So the role of key public officers and, key public institutions, like Minister of Finance, Controller Accountant General, Auditor General, Principal Account Holder, Principal Spending Officer. All of these are key people whose responsibility must be known. If you are going into the exam hall, because the examiner could throw something at you, then certainly dealing with the Nolan's principle when it comes to governance, okay, how public sector organization or public sector officers are expected to behave using the Nolan 7 principle. That was asked by the examiner in the November 2024 examination, which was the first examination under the new syllabus that the examiner brought up in that case. And so the role of key public officers and all these, we must understand them. Then certainly you must be aware of the various other issues in respect of the accounting techniques or approaches. Okay, the accounting techniques or approaches. Cash basis of accounting. Okay, you must know these pretty well in that particular case. Cash basis of accounting. Okay, let's see. Give me a moment. Let me see. Okay, so accounting techniques, we must know about this. This is where we are talking about cash basis of accounting, accrual basis of accounting, modified cash basis, and then accrual basis. And so these are introductory discussions that you must know about as a public sector accounting and finance student. These are introductory areas. And so we're going to have 20-mark question in the exam hall on these kind of issues. And so you must understand them. Now, they are also going to then set us up on the other issues that we are going to be getting excited on as we go ahead with the discussion. So that is the first area that we need to understand when it comes to public sector accounting and finance. Now, remember, as I mentioned, I am doing this to help you to understand how the syllabus is structured for each of the papers, right? And then you know how then to prepare your study plan so that you structure your studies out to enhance or increase your chances of completing the syllabus in record time and putting yourself in the position to ultimately pass the examination at the end of the day. And so those are the introductory areas. Once we finish with these introductory areas, we're going to be coming to the 20 marks area that is going to set us up, because under revenue management and expenditure control, as you are looking at this topic, you are going to be coming along with some of the international public sector accounting standards, the IPSAS. Okay, you are going to be coming along with some of the IPSAS that you have to be mindful of. And so there is going to be a 20 marks area waiting for us, dedicated. Okay, 20 marks, done deal, waiting for us in the exam hall for the IPSAS that you need to understand. So what are the IPSAS here? And so this is where we mentioned that it is important you'd write, say, financial reporting and public sector together, right? Because of the fact that there are a lot of relationship. There is about 40 marks question that will, find itself in financial reporting and in public sector, only that the context will be different, but the principles will be the same in that regard. And so when it comes to the IPSAS, we are talking about something like IPSAS 17, property, plant, and equipment. We are talking about IPSAS 16, investment property. IPSAS 12, inventory. All right. We're talking about IPSAS 2, cash flow statement. Okay. Certainly IPSAS 1, preparation of financial statement. Okay. We are talking about IPSAS 23, revenue from non-exchange transaction. IPSAS 9, revenue from exchange transaction. Then IPSAS 11, construction. But you got to be aware that these three IPSAS, they are all about recognition of revenue. So there is a new IPSAS that is coming up in 2026. That is IPSAS 47, revenue. And it is to bring together all of these other IPSAS when it comes to recognition of revenue by the covered entities in that case. Okay? By the covered entities in that case. So from 2026, we are going to be looking at IPSAS 47. But for now, July 2025, November 2025, we're still going to be dealing with these. But from 2026, this IPSAS 47 is going to be effective, and that is replacing 23, 9, and 11. There is that relationship, because in the financial reporting class in the private sector, when it comes to revenue recognition, we had IAS 18, and then we have IAS 11, construction contract. Right? But these were replaced with IFRS 15, revenue from contract with customers. That is the same transition happening in the public sector. So from 2026, effective 1st January 2026, entities will be required, public sector entities will be required to then apply the IPSAS 47, because that is now going to become the revenue standard, replacing IPSAS 23, IPSAS 9, and then IPSAS 11. But for July and November, we're still going to be dealing with these three in that regard. So those three IPSAS are there that we need to understand there. Then certainly we go to IPSAS 5, borrowing cost. Very important, right? IPSAS 31, impairment and dealing with issues in respect of intangible assets. Okay. And the list is pretty tall. Okay, the list is pretty tall. There are a lot of IPSAs that you must know about, but these are just a number of them that I'm just coming up with. And so why? When you start dealing with the revenue management and expenditure control, this topic, as you are going to see when we start the live lectures in the class, we are going to now be bringing up all of these IPSAs, and then you're going to see how the IPSAs relate to each other. But we're going to have 20 marks question on the International Public Sector Accounting Standards, and you must know all of them. Just like how in the private sector, we must understand all the IFRSs. Now in public sector also, we must know all of these IFRSs. Now the beauty of this is that most of the IPSAs are also in financial reporting. And so if you're doing financial reporting and public sector together, boom, it's a good thing, because a lot of the ideas, you're just going to be transporting them, but then you contextualize. You're just going to be transporting them, you contextualize in that case. That's one of the reasons why it is recommended that you write public sector and then financial reporting together. Okay, you write it together generally in that particular case. But that is 20 marks question coming in from the International Public Sector Accounting Standards. Now, once you finish with the introductory issues, know the financial statement, revenue management and expenditure control, understand the various bases of accounting, know some of the IPSAs which you have to know about. Now, remember, in our mobile application, we have lecture videos on, largely almost all of the IPSAs that you have to be mindful of. And we have this available on our portal. And so that is one of the things that you get when you enroll. You get access to all of those lecture videos and be able to study at your own pace wherever you are, because you can download the videos and watch them over and over again in the mobile application and be able to finish the syllabus in record time. So you will be able to deal with things even before the live lectures where a certain topic is going to be treated. And that flexibility allows you to go through the syllabus and put yourself in the position to ultimately pass the examination. That's one of the key issues or key benefits that you get enrolling on our platform and studying under my mentorship for the examination. So once we are done with these IPSAs, the next thing we go to now is to look at preparation of financial statement. 20 marks question waiting for us in the exam hall. But your ability to understand preparation of financial statement depends on your understanding of the topic revenue management and expenditure control, as I mentioned earlier, because you must know the various types of revenue to central governments, covered entities, and all of those things. Then number 2, you must also be aware of the various IPSAs. Now, when it comes to the financial statement preparation, at least you must know about IPSAs 17, property, plant, and equipment. You must know about IPSAS 19, provisions. You must know about IPSAS 12, inventories. Like, it's a non-negotiable. You must know these IPSAs off head before you get into the exam hall. All right. So in addition to learning the IPSAs and having a dedicated question on the IPSAs, when it comes to the preparation of the financial statement, that 20 marks area that the examiner is going to be bringing, you have to have an understanding of the IPSAs. And so revenue management and expenditure control will help you to know the various sources of revenue to the central government, to the covered entities, and then the expenditures of the central government and the covered entities as well. And that is 20 marks area, financial statement preparation. Now, by the time you are getting into financial statement preparation, it means that you have gone through the introductory topics, because you know the techniques of accounting. There is a way we prepare the financial statement if we are in the cash basis. There's a way we prepare the financial statement when we are doing accrual basis. There's a way we prepare the financial statement when we are applying the modified accrual basis. And so you would have done this, you would have gone through some of the key IPSAs before you come to preparation of financial statement stage 3. Then we go to stage 4, And that is, now that we know how to prepare the financial statement, let's use the financial statement we know how to prepare to now evaluate the financial performance and position of the entity. So, evaluation of financial performance and position of the entity. This is 20 marks waiting for us in the exam hall. 20. Because now you know what goes into the preparation of the financial statements. Now you understand what revenues are, what expenditures are. Now you understand how government generates revenue and incur expenditures. So based on that understanding, you can now evaluate the performance of the entity. Now there are 3 methods that or approaches that can be used to evaluate the financial performance, position, and condition of an entity or the central government as a whole. The first one that we need to know about is certainly the common size analysis. Okay, so we may be asked to prepare the common size statement, and then we analyze the common size statement. Number 2 is ratio analysis. Okay, ratio analysis. This is where you are going to be calculating various ratios, and then you use that ratio to analyze the financial performance, financial position, and financial conditions of the entity. That is ratios. Then the third one is the statement of budget performance. This is where we are going to be comparing the budget of the entity with the actual result. We want to find out what is the outcome. So if government budgeted that, they will get revenue, total revenue of 200 billion in the year, at the end of the year, how much revenue did they get? Were they far from their budget or closer to their budget? Why did they move far? Why were they close to their budget? That is the evaluation of the financial performance and position of the entity. And so for 20 marks in the exam hall, one of these guys are going to be there. Common size statement, ratio analysis, and budget statement of budget performance. Again, as I mentioned, by the time you are getting to this level, you have done the introductory aspects, you've done some of the IPSAs, most importantly, you've prepared financial statements, and so now you are now going to use that knowledge to be able to evaluate the performance and position of the entity. That's the fourth thing. And so this is how the study or the course is structured. The topics are intertwined to put you in the position to actually go into the exam hall and pass the examination at the end of the day. So once we are done with these, then we finish with the financial reporting part. We now come back to the public financial management part. And that is the section A of the syllabus, where we talk about public financial management. Actually, we could even start from here and then dig deeper, okay? But we could also wait and do this as the last one generally. And so what's happening here is that there are 2 things for 20 marks in the exam hall that the examiner is going to be asking you about: public financial management, budgeting, okay? And then number 2, the PIFA framework. Budgeting and the PIFA framework. These are the 2 key things here for 20 marks that the examiner will be throwing at you. Under budgeting, you are looking at, the various types of budgeting, the processes of budgeting, the advantages of budgeting, the disadvantages of budgeting, all of those things under budgeting that you have to be mindful of. When it comes to the PIFA, the same thing. We have the objectives of the PIFA framework, reasons for the PIFA framework, limitations of the PIFA framework. Then you now come to the calculation aspect where you are dealing with the M1, weakest link method, M2, the average method, and then number 3, preparation of the statement of budget performance in the PIFA environment. Okay, preparation of statement of budget performance in the PIFA environment. 10 marks waiting for us in the exam hall. So when it comes to public sector accounting and finance, this is what we are talking about. And so if you're able to have the understanding, get those introductory issues very well, understand them very well. Then you come to the IPSAS, build knowledge. Well, yes, it's a lot, but that's why you have to spread your studies. That's why we say all the time, you cannot wait 2 weeks to the exam, a week to the exam. That's where you start studying. No, you need to be studying. You need to be consistent. Then you come to the financial statement preparation. Then you come to the evaluation of the financial statement. Then suddenly you can look at the PFA or the public financial management system, which will be your last thing. So when it comes to the public sector accounting and finance syllabus, this is the breakdown and the way the topics are knitted together and the way you learn them. And most importantly, how the examiner is going to be bringing them out in the exam hall. Because I say this to my students all the time, and you're going to see this a lot during our live lectures when we start the live lectures for the main class. The goal is not just about learning, but the goal is to ask yourself, how would the examiner going to set the question? What is the structure of the questions? How would the examiner ask it? So that's how you are going to be looking at this. So yes, we know there's going to be question on IPSAS. Don't be bothered about which IPSAS, because that one, you are going to just kill yourself for free. You have to be concerned about each of the IPSAS that you go through. How is the examiner going to set the question? What am I supposed to be on the lookout for? What are the verbs? What are the things that the examiner is going to say that I need to be mindful of as I go into the exam hall? But that is the idea about public sector accounting and finance and the key topical issues that we have to be mindful of. So our introductory issues done, IPSAS done, statement of financial preparation of financial statement done, evaluation of financial statement, and then suddenly the public financial management system, 20 marks. This is how your public sector syllabus is. So now if you are preparing your study plan, it means your study plan should be broken down into these things that I've mentioned. Because remember we said the study plan, you're not just going to write there, oh, today I have public sector. Yeah, today you have public sector. What in public sector are you doing today? Okay, I'm looking at accounting techniques. Okay, I'm looking at IPSAS 17 and IPSAS 16. Okay, I'm looking at evaluation of financial statement, focusing on ratio analysis. That is how you prepare the study plan so that you will be able to walk through the syllabus consistently and put you in the position to go into the exam hall, write the exam with confidence, and then pass the examination. And that is what you must understand when we talk about public sector accounting and finance. Let me know in the comment section or the chat box if you have any follow-up question on the public sector. You can put it in the chat or the comment section. I'll be answering that for you as we go on the live call. Even if you're watching the playback, you can still put it in the comment section, because I will still come in and then provide you with some answers if we have to. So that's public sector. Let's come to financial reporting. Financial reporting. Financial reporting is also similar to what you saw in the public sector accounting and finance, but now we are in the private sector environment, certainly at the end of the day. And so in financial reporting, as always, we're going to be starting with some introductory discussions. So you must have knowledge on some key introductory discussions. Now, I'm calling it introductory discussion. It doesn't mean it is not in the syllabus. It's in the syllabus. You must know about it. So some introductory discussions. The introductory discussions here will include the following: the conceptual and regulatory framework. Okay, the conceptual and regulatory framework. This will help you to have an understanding of the various things I mentioned in the public sector, right? Elements of financial statement, measurement basis, qualitative characteristics of financial statement, various types of financial statement that the entity is preparing, and the objectives of the various financial statements. All of those things are captured under the conceptual framework and regulatory framework for the most part, okay? Then certainly the concept of capital and capital maintenance, all of those things will be captured under the conceptual framework and the regulatory framework. So that's the first thing we must understand in the introductory aspect. From there, we need to share some thoughts on the IFRS foundation. Okay, this is where we are looking at how accounting standards are set. Okay, the various IFRSs, IASs, how they are set. So what are the stages that we go through in setting standards generally? What are the processes that we go through? What are the roles of the International Audit and International Accounting Standard Board, then the advisory committee, then the various other bodies involved in the IFRS foundation in setting of the standards? What are their roles? We must know about this. It is part of our introductory discussions. It is important there. Number 3 is ethical issues. Yes, the professional accountant is required to behave in a manner that will be acceptable in the society. And so the fundamental code of conduct of integrity, objectivity, professional competence and due care, professional behavior, confidentiality is very important here. Then we must know about the threats to the code of conduct, which is self-interest threat, self-review threat, advocacy threat, familiarity threat, intimidation threat. So those ethical issues or ethical dilemma is part of the introductory issues that we need to understand. Then one thing you must also be mindful of is that now governance is taking, not a center stage, but governance is really key, and we need to understand corporate governance. All right? Very important. We need to understand corporate governance. So 2 key things we must be aware of here about corporate governance. What are the governance principles enshrined in the Companies Act 2019, Act 992, and then the governance principles. So you are going to be making reference to the Companies Act 2019, Act 992. Then also the corporate governance principles issued by the Security and Exchange Commission. You must know about them. So all of these are under the introductory issues. Why am I doing this? Because this is a 20 marks area that the examiner is going to be throwing at you in the exam hall. 20 marks. So although I am calling them introductory discussions, they are key issues that will be setting us up for the rest of the discussions when it comes to financial reporting. So under the introductory discussions, conceptual framework and regulatory framework, the IFRS foundation, ethical issues, governance in financial reporting, or just governance in general. And we are focusing on the corporate governance code corporate governance principles as stated in the Companies Act 2019, Act 992, and then the corporate governance code issued by the Security and Exchange Commission to govern how entities are directed and controlled, especially those listed on the Ghana Stock Exchange. And that is what we must understand when we talk about the first part of the discussion. 20 marks, I call them introductory issues, but there are key issues that we need to understand there. Once we are able to beautifully discuss these introductory issues, get all of them out of the way, 20 marks done and dusted, we now come to, the big aspect of the discussion, which is the IFRS masterclass. And so this is where you're going to be looking at the various accounting standards. And you must understand that when it comes to financial reporting, the accounting standards are the pillars that hold the entire subject. Why? Because we will have a 20-mark question on the accounting standards. Then we'll have number 3, single entity financial statement. If you are preparing statement of profit or loss and other comprehensive income, statement of changes in equity, statement of financial position, or the cash flow statement, all the footnotes there, we have to apply the accounting standards. And so we have 20 marks dedicated on the accounting standards. Then we have 20 marks applicable to the single entity financial statement preparation. Even when it comes to number 4, that is evaluation of financial statements. Okay, evaluation of financial statements. It's important you understand that the accounting standards are going to be chasing us down here depending on the context of the question. Why? Because sometimes the examiner can give us a set of financial statement with some footnotes, which will require us to then adjust the financial statement. The way we adjust the financial statement will depend on our understanding of the accounting standards, because we have to apply the accounting standards to the footnotes. Then we can do the necessary adjustment before we calculate the ratios and interpret it. Then the fifth thing, consolidated financial statement, that also you must have the accounting standards there, because some of the footnotes when it comes to consolidated financial statement, we will have the accounting standards there. And so the accounting standards then become what? Pivotal when it comes to the financial reporting examination. And this is also seen even in corporate reporting. The accounting standards plays a key role even in the corporate reporting examination. And so what are the accounting standards? We've gone through this before. I'm going to be bringing it up again. So we have the non-current asset standards. Please note, as I tell you always, it is important you understand that you understand what the examiner is going to be doing to you in the exam hall, the structure of the questions in the exam hall, so you can put yourself in the position to ultimately pass the examination. So the big question you ask yourself is, okay, when it comes to the accounting standards, what am I looking at? All right. Non-current asset accounting standards, whether you like it or not, there is going to be something about them, either dedicated specifically, or there will be a footnote that will require you to apply them. And this is where we are talking about IAS 16, property, plant, and equipment, IAS 23, borrowing costs, IAS 20, accounting for government grants and disclosure of government assistance, IFRS 5, non-current asset held for sale and discontinued operation, IAS 40, investment properties. So these are non-current asset accounting standards. Whether you like it or not, these 5 accounting standards, you will call on either 2 or 3 of them in every examination. Again, either as a dedicated question, or the principle will be applicable in dealing with something else that is another accounting standard or a certain footnote that you are applying. And so the non-current asset accounting standards, very important. You must understand them very well. But connected to these non-current asset accounting standards are other sets of accounting standards that you can see on the far right side, and that is IAS 37, provisions, contingent liabilities, and contingent assets. IAS 36, impairment of assets. IAS 38, intangible assets. IAS 12, income tax, very important. And then IAS 21, effect of changes in exchange rate. Now, for those of you writing, we are in financial reporting, right? So for financial reporting, whether you like it or not, you are guaranteed on IAS 16 and IAS 12, at least. So at least these 2 accounting standards is a done deal. It's waiting for you in the exam hall. Because whether I like it or not, you will deal with IAS 16. Whether I like it or not, you will deal with IAS 12. There's a 99.999 probability that you're going to be dealing with it. So these 2 accounting standards, you must know them. But you see, the beauty of the standards, as I mentioned, is that they are intertwined. Okay, they are intertwined. So for instance, we could start the broader discussion with IAS 16, property, plant, and equipment. Now, when you take almost every accounting standard, one of the things you must understand is the issue in respect of key definitions. So when you pick most accounting standards, key definitions, okay? Because there are terms that we need to understand, terminologies that we need to understand when it comes to the accounting standards. Number 2, you must know the objectives of the accounting standards. Number 3, you must look at the initial measurement and recognition. Or before initial measurement and recognition, let me talk about initial recognition criteria, rather. So recognition criteria. Okay, then initial measurement and recognition. Okay, Now, you know the difference between measurement and recognition. Measurement is simply the monetary value at which a transaction is carried in the books. Recognition is simply the incorporation of a transaction into the financial statement of the entity. And so, initial measurement and recognition. Next, you come to subsequent measurement. All right, subsequent measurement. Then the last thing is going to be disclosure requirements. So when it comes to the questions the examiner is going to be asking you, he can come from anywhere at all. At least the first two, we can ignore the first two a little bit, but the last four are crucial. So the examiner can come for you in recognition criteria. He can come for you on how something should be initially recognized. How would you know? Because the dates for the period that you are recognizing the item will be initial recognition. Or sometimes it has to be subsequent measurement. So you're going to do both initial recognition and subsequent measurement for the reporting date. Then the third thing is going to be disclosure requirement. So in respect of a certain accounting standard, what has to be disclosed in the financial statement or in the notes to the financial statement. So these four things are crucial. Almost every accounting standard you pick, you must ask yourself, what is the recognition criteria? For instance, when it comes to provisions, what's the recognition criteria? Okay, if it is rotten, you provide for it. So rot, meaning that the amount is reliably estimated, or there is a present obligation. T, transfer of future economic benefit embodying the entity, or the settlement of which will result into transfer of future economic benefit. All right. When it comes to assets, when do we recognize assets? We recognize assets if the cost can be reliably estimated and it is probable that the future economic benefit will flow to the entity. That's it. That's it. Right? So when you pick the standards, initial recognition criteria, initial measurement, subsequent measurement, disclosure requirement, every accounting standard you are learning, you must know these four things. Because the examiner can come for you in disclosure, which is reading, theory aspect, or on subsequent measurement, which means you are going to be doing recognition and then the subsequent measurement in that regard. So when you pick something like IAS 16, property, plant, and equipment, divided into two broad areas, we have the initial recognition and then subsequent measurement. Okay, initial recognition and then subsequent measurement. Now, when it comes to initial recognition, what do we say? According to IAS 16, the initial cost of an asset shall be the purchases or the acquisition cost or construction costs, plus all other directly attributable costs incurred in bringing the asset to its present use. And so when you're dealing with IAS 16, on the initial recognition of property, plant, and equipment, there are certain accounting standards that may come to town depending on the context of the question. So what are these accounting standards? We will have IAS 37, provisions. Why? Because if there is an environmental cost that the entity will incur, or landscaping or dismantling costs that the entity will incur in the future, and there is a present obligation which is either legal or constructive, we have to discount that into present terms, and that present value should be included in the initial cost of the asset. So IAS 37 can come to town when we are dealing with initial recognition of an asset. Not only that, we can call on IAS 23 borrowing cost. Why? Because when an entity borrows funds to finance the acquisition or construction of a qualifying asset, then the borrowing cost must be included in the initial cost of the asset. So borrowing cost is coming to town. So we see provisions, we see borrowing cost coming to town. Not only that, we are also going to be having issues in respect of IAS 20 accounting for government grants and disclosure of government assistance. Why? Because when an entity receives government grants, there are two ways it could be accounted for, either the deferred income approach or the right of approach. If you are going to be doing the right of approach, then the initial measurement and recognition of the asset, let me do this, initial measurement and recognition of the asset will be different. And so IAS 20 could come to town, and you got to be mindful of that. Not only that, IAS 21, effects of changes in exchange rates, could come to town. Why? Because transactions that are denominated in a currency other than the functional currency of the reporting entity must be translated into the functional currency of the reporting entity. And so IAS 21, effects of changes in exchange rate, can come to town there in the initial recognition. Now, so when you are doing initial recognition, you see that the connection, and that is how you learn the accounting standards. So it's not that the accounting standards are like islands on their own. They are intertwined. Yes, we must know them independently, but the beauty of the accounting standards is that they are intertwined with each other. And when you study them like that, it increases your ability to understand them very well, and most importantly, put you in the position to understand them and go into the exam and pass the examination. So effects of changes in exchange rate, very important. We must understand them. So just introductory area, initial measurement, we are having these accounting standards coming up. On subsequent measurement, IAS 16 states that the entity can apply either the revaluation model or fair value or carry it at the cost model. Okay. But on subsequent measurement, there are some accounting standards that could also come to town. The first one is certainly IAS 36, impairment of assets, because we have to, on subsequent measurement, we have to test for impairment. Why? Because the standard says that an asset cannot be carried above its recoverable amount. And the recoverable amount of an asset shall be the higher of value in use and then the fair value less cost to sell, or the net realizable value. So IAS 36, it's going to be coming to town here. And remember, it is not just in respect of the impairment of specific property, plant, and equipment. We also have impairment of cash generating unit, which is a whole business suffering an impairment. But we're going to be coming back to that impairment. Not only that, there could be transfers on subsequent measurement. What do we mean? A property, plant, and equipment could be reclassified. The management will decide to sell the property, and the property may be available for sale, and they are looking or located a buyer, and they expect that the sale should be completed in less than 12 months. Okay. In that case, that means we have to derecognize it from PPE to a non-current asset held for sale and discontinued operation, which is IFRS 5, non-current asset held for sale and discontinued operation. Okay, not only that, when we revalue the assets, what's going to be happening is that there may be tax implication on subsequent measurement, because remember, IAS 12 states that an entity must recognize the future tax consequences on all transactions, and PPE or property, plant, and equipment is not an exception to that rule. For that reason, IAS 12 is going to be coming to town here, and we must understand it. Because yes, there is IAS 12 standing on its own, we must know it, but also when we revalue assets and there's a revaluation surplus or whatever, the tax implication of that must be accounted for as well in the books, and that is where IAS 12 income tax is going to be coming to town. And so on the subsequent measurement, not only are we dealing with IAS 36, IFRS 5, we're also dealing with IAS 12. Heck, we can also bring in IAS 40, investment property. Why? Because again, the transfer issues that I mentioned can happen here. Because we can transfer an investment property into a PPE or a PPE into an investment property. Hey, an investment property could even be transferred into inventory to be sold in the ordinary course of business of the entity. So you realize that Now, there are other things I could add, okay? I'm just being a bit conservative here when in the discussion. But you realize that connected with IAS 16 alone are what? 8 other accounting standards. Again, I'm just being conservative here. There are about 3 or 4 more of them that we could bring here because of the connection or the relationship. But that is the idea here. That's the idea here. So on a layman's or in a basic view, that's what's happening. So you are dealing with IAS 16, but it is connected with 8 other accounting standards. So when you learn it like that, when you see it like that, it makes the standards easier because you know, oh, this thing that I'm learning, I will apply it in this standard. So when you do it like that, it makes your brain understand that, hey, you can't forget this thing because you are going to apply it in this, because you're going to see it in another standard. So when you see it in another standard, then it becomes a revision, then you apply it to that standard. I hope you are getting the idea. It becomes a revision, then you apply it to the standard. So that's IAS 16 and the various standards that we need to understand there. Now, in addition to these standards here, connecting with IAS 16, are 3 other standards that, I talk about all the time. IFRS, financial instruments, leases, and then IFRS 15, revenue from contract with customers. These 3 accounting standards, we must know about them. Leases, revenue from contract with customers, and then financial instrument. Now, when it comes to financial instrument, there are 3 accounting standards for financial instruments. 3. So we have the IFRS 9, financial instrument, recognition and measurement. Then we have IAS 32, financial instrument presentation. We use that to deal with compound or convertible loan notes. So when an entity issues convertible loan notes, then the convertible loan note must be split into the debt component and the equity component in accordance with IAS 32. That is financial instrument presentation in that case. Then you come to IFRS 7, and that is financial instrument disclosure. So when it comes to financial instruments, 3 different accounting standards there. Then we come to leases, IFRS 7. Then we come to IFRS 15, revenue from contract with customers. Now, these 3 are together, and you must know them together like that. Why? Because either the examiner will bring them independently. So we could have question on IFRS 15, revenue from contract with customers, or it could form part of the notes to the preparation of the financial statement, the single entity financial statement. Because an entity could sell something, but performance obligation hadn't been satisfied yet, but it had included the amount in their revenue. If performance obligation hadn't been satisfied, how are you including it in the revenue? Which means they are breaching IFRS 15. So you must come in and reverse the transaction and account for it in a manner that it has to be accounted for. Or the entity makes sales and they have an option to buy back the goods at some time in the future. So if we sold some goods with an option to repurchase at a time in the future, that means the transaction is not a sale, but it's a financial arrangement. So that transaction should not be accounted for in accordance with IFRS 15, revenue from contract with customers, but should be accounted for in accordance with IFRS 9, financial instruments recognition and measurement, because it means we went for a loan and we had used the goods as a collateral facility. So if the entity had included the proceeds in revenue, what do we have to do? We must take it out and rather recognize a loan note, because it's a loan that has been taken from the supposed customer that we sold the goods to. Now, although the goods are with the customer, what it means also is that we would have to recognize the goods as part of the closing stock at the reporting date. Because remember, we hadn't sold the goods. We are using the goods as a collateral facility. So it is still ours and must be included in the closing stock at the reporting date. And that is the beauty of the accounting standards again. So when you are learning IFRS 15 and you're learning IFRS 9, it's not like they are two distinct standards. No, they have connection. Then you come to leases, IFRS 16. There is a part in leases where we talk about a sale and leaseback transactions. In a sale and leaseback transaction, the way you treat sale and leaseback depends on whether performance obligation has been satisfied or not in accordance with IFRS 15. Because if performance obligation has been satisfied, then the transaction is a sale. Then we derecognize the transaction. But if performance obligation had not been satisfied, then the transaction is not a sale, but again, a financial arrangement. So, although you are hearing sale and leaseback, it will rather be accounted for in accordance with IFRS 9 financial liability. And that's the beauty of the standards. So these three standards also have a lot in common. So when you learn it like this, or you see the accounting standards like this, it becomes beautiful. So you know that, it is not like, you are learning a tall list of things. No, they are connected. They are related. You are going to be applying one principle in another standard. You are going to apply this principle in another standard. And when you study it that way, it put you in the position to go into the exam hall and write the exam with much confidence generally. Why? Because you understand exactly what you are doing. So you look at IAS 16, 4 accounting standards coming up, making 8 accounting standards coming up, making 9 accounting standards, just under IAS 16. Then these 3 accounting standards, or maybe 5, financial instrument alone is 3, the connection there. Then the other accounting standards, like IAS 2, inventories, IAS 41, agriculture, IAS 8, accounting policies, changes in accounting estimate and errors, IAS 10, events after the reporting period, IAS 33, earnings per share, IAS 24, related party transactions or related party disclosures, transactions and disclosures. These are the accounting standards. And this is pivotal when it comes to passing the financial reporting examination. Your passing or failing of the exam depends on your understanding of the accounting standards. And as I said, don't look at it and say, oh God, when will I finish all of these accounting standards? You gotta know about them. And the beauty of it is what I mentioned here, that they are intertwined. They are related with each other. So it's not like, you learn them and they are on their own and you have to, no, they are connected with each other, and that is the beauty of the accounting standard. And as I mentioned, that is one of the benefits you get in enrolling on our platform, because you have access to key summary videos on all of these accounting standards. Summary videos explaining the fundamental principles on all these accounting standards. In addition to that, you get access to the full lectures with practice questions, right? So once you watch the summary videos, which means that with the summary videos, you can go through everything and finish the syllabus in record time, or finish the accounting standards in record time. So once you understand the principles underlining each of the standards, what do? You now start exposing yourself to questions. Because I say this always. It's not about how many questions you solve. In the exam hall, 99.9% of the time, the questions you will see there, you've never seen them anywhere. 99.9% of the time. So if the questions you see there, you've never seen them anywhere, in the exam hall, what are you doing? Applying principles. So you must know all the basic principles underlining each of the standards and the advanced principles underlining the standards. Why? Let me just show you something. For instance, if you take a standard like IAS 36 that I spoke to you about earlier, impairment of assets. The standard says that an asset cannot be carried above its carried amount. Yeah. And so when the carrying value of the asset is greater than the recoverable amount of the asset, it means the asset has suffered an impairment. Good. However, where the carrying amount is less than the recoverable amount, the asset hadn't suffered an impairment, and we will carry it still at the carrying amount. That's okay. But when you're dealing with a cash generating unit in impairment, now this is where the advanced issue is going to come in. When you're dealing with a cash generating unit, which is a business or a segment or a division of a business, you have to calculate the impairment of the cash generating unit. When you finish, you must allocate the impairment. Now, the basic rule is that you write off separately identified impaired assets. So, as stated in the question, did some assets suffer an impairment? Yeah, you write it off. Number 2, is there goodwill? Does the cash generating unit has goodwill? If it does, you write it off. If we still have some of the impairments left, then we are going to allocate it among the remaining assets that have not suffered an impairment already. Now, the advanced rule about IAS 36 is that after the allocation of the impairment, an asset cannot be carried below its fair value less cost to sell. So when you finish the allocation, an asset cannot be carried below its fair value less cost to sell. And that is the advanced aspect of IAS 36, impairment of assets. So what you are doing is you got to understand both the basic principles on each of the standards, and some of the standards have a little advanced understanding that you need. All I'm trying to say is that in order for you to pass your financial reporting examination or corporate reporting examination, you need a deeper understanding of the accounting standards. Because when you understand the accounting standards, that is where you can then put yourself in the position to come and successfully deal with single entity financial statement. Because as I mentioned, each of the footnotes will be an accounting standard that you're going to call on. Evaluation of financial statements, same idea, same principle may be applicable there. And even in consolidated financial statements, same idea, same principle will be applicable. And so one thing you must understand is that you have to be solid on the accounting standards. And that is why I want you to leverage on the key summary videos in the mobile application. Download them. Watch them over and over again. Have a summary note on all the standards. If it is a diary, have a diary. If it is a notepad, have a notepad. And this is separately just for the accounting standards. Okay? Separately just for the accounting standards. And you have all your principal rules. So when you are solving a question and you are reading something in the question and you are not understanding, or you solve the question and you get it wrong, and you are looking at the solution and you've done something you don't understand, what do? You come back to the principle and find out, which principle are they applying here? Because in the exam hall, all you are doing is applying principles. That's all you are doing in the exam hall. You are applying principles, period. That's all you're doing. You are applying principles. So once you get your accounting standards right, it means single entity financial statement, you will succeed there in that case. Then certainly the last thing will be, the last but one will be financial statement evaluation or evaluation of financial statement. That's a 20 marks area coming in the exam hall. Give me a sec. Let me see if I can probably bring this up. Yeah, I could bring it up. So when it comes to ratios analysis, there are 6 types of questions the examiner can bring. One of them will be in the exam all the time. Now, this is corporate reporting 6 times, 6 types of questions. For financial reporting students, we just have 4 types of questions you need to understand. The first one is where the examiner presents you with a simple financial statement. Okay, simple set of financial statements, and you're just calculating ratios and analyze. Simple. No problem. No giddy, nothing serious, nothing intimidating. Very sweet, simple, straight to the point. You are just calculating ratios and analyzing the ratios. That's all. The second type of question is where the examiner will just ask you to write the analysis in the exam hall. So here you are not calculating any ratios. The examiner has already done the calculation. What you're doing is analyzing the ratios. Number 3 is the vertical or the common size analysis. So this is where either you will be required to prepare a common size statement, or the examiner will present you with a common size statement and you are going to analyze the common size statement. The common size statement is simply where the original financial statement is represented in percentages. So when it comes to the common size income statement, total revenue is used as the basis. What it means is that each of the line item in the P&L account is expressed as a percentage of the total revenue. In the statement of financial position, common size statement of financial position, the total asset is used as the base. So each line item in the statement of financial position is expressed as a percentage of the total asset. And that's the third type of question the examiner can hit you with. The fourth type of question is where there is changes in businesses or changes in the operations of the entity. Either in the current year, the entity is disposing part of the business, or in the current year, the entity has acquired another business. The way you calculate the ratios and do the interpretation of the ratios will be different from the way you deal with normal ratios. Then certainly number 5, financial statement with footnotes for adjustment. So here you are going to apply the standards so that you recalculate or re-prepare the financial statement, then you calculate the ratios, then you evaluate the performance of the entity. So you are doing 3 things in the 5th type of question. Then consolidated cash flow analysis. This is exclusive to the financial corporate reporting students. This is exclusive to the corporate reporting student. Financial reporting, the examiner will not ask you for, consolidated cash flow statement analysis. But this is for corporate reporting students. So when it comes to that evaluation of financial statement aspect, that 20 marks area that the examiner is going to be bringing, there are some theories there, limitations of ratio analysis, and then importance or objectives of ratio analysis. In addition to these 2 theories, you must know about each of these types of ratio questions, the principles underlining how you approach such questions and how you do the analysis. And we have this analysis guiding principle available, which you are going to be getting access to certainly in the main class when we are discussing this in detail. We have the analysis guideline available and all of the types of questions, the way you approach them. Okay, all of the types of questions, the way you approach them. And these are the things you must understand when it comes to the evaluation of financial statements. Then suddenly we come to the last one, which is consolidated financial statement. 20 marks area, question 1, waiting for us in the exam hall. Consolidated financial statement. Very important topic that we must know about when it comes to financial reporting. Now, here, there are a number of things that you need to be aware of. There are some standards here. So in addition to all of those standards that we've spoken about, there are some other standards here that you must be mindful of, like IFRS 11, joint venture arrangement. Okay. We have IAS 28, and that is investment in associates. We have IFRS 3, business combination. And then we have IAS 27, separate and consolidated financial statement. Okay? So in addition to the other accounting standards that you must be aware of, that you must know about when it comes to the preparation and presentation of financial statements, all of those accounting standards that we spoke about here, in addition to these guys, when you get to consolidated financial statement, you must know about these 4 guys as well. And again, on our portal, we have the consolidation masterclass video available. So we have the consolidated masterclass videos available, going through all of these things and the various concepts that you must understand when it comes to consolidated financial statement. Why? Because you must understand the basic principles about consolidation. Again, in the exam hall, all you are doing is applying principles. So when you read the footnote, you should be able to know how to undertake the key workings based on the context of the question. How do you get your group structure? Okay? Because the group structure will help you to know the post-acquisition period. If you miss the post-acquisition period, you're going to be losing a lot of calculations when it comes to consolidated financial statement. And so we must understand the post-acquisition period from the group structure. We must know how to calculate goodwill. Whether I like it or not, you are going to be calculating goodwill when it comes to consolidated financial statement, either goodwill at acquisition or goodwill at the reporting date. You must know how to calculate the goodwill and apply the principles. Not only that, you must know how to deal with non-controlling interest if we don't have 100% ownership of the business. Okay, so non-controlling interest, if we don't have 100% ownership of the business, you must know about that. So group structure, so you know about post-acquisition period, goodwill, non-controlling interest, dealing with intra-group trading. Okay, this is pivotal to your ability to pass the examination. Intra-group trading. So if they sell goods among themselves or between themselves, how do you account for that? If they sell assets, how do we account for that? If they issue loan, how do we account for that? The key thing is that all intra-group transactions must be eliminated on consolidation. So how do we deal with that? The basic principles about intra-group trading, you must know about it. Then certainly the calculation of the post-acquisition profit or loss. Okay? The calculation of post-acquisition profit or loss. And then if there is an investment in associate, how do we account for investment in associate using the equity accounting in accordance with IAS 28, investment in associate. All right? So these are the things that you must understand, again, when it comes to consolidated financial statement. So in the financial reporting class, this is the breakdown of the syllabus and the various things that you must understand under each of the breakdowns. Again, why is this important? Because once you know, okay, this is the breakdown, this is what I'm expected to know about, it helps you to then put yourself in the position to prepare your study plan, know what you have to do, and then go through them with the videos available in the mobile application as well as on the website. Go through the videos and as well as joining the live lectures, doing assignments, involving yourself in a performance evaluation test and all that, and that will position you to be able to pass the examination. So that is the idea about financial reporting as well. So you want to pass financial reporting, this is the breakdown. These are the structure of the questions. These are the topics. And as you can see, what is underlining all of these is the accounting standards. Because aside the theory area that we spoke about, that introductory discussion, the theory area, conceptual framework, IFRS foundation, ethics, and then governance in financial reporting, and sometimes some IT issues, if we can bring that up, that's 20 marks. Apart from that, everything else is a serious business you are dealing with. You can't chew baba here. The remaining 80%, there is no baba there. You must understand thoroughly each of the things there, especially the accounting standards and the structure of the questions. These are the things you must understand as well when it comes to the financial reporting and the breakdown of the financial reporting syllabus. All right, so let me know if there are any questions that I can look at, and then if there are any questions that I can look at generally. Now remember, as I mentioned, Our enrollment is still ongoing. Our live lectures will be starting on the 7th of April 2025. So 7th of April 2025, our live lectures for the July 2025 examination is going to be out. Hopefully either, over the weekend or next week, your results will be released for the March 2025 examination. And so you be mindful of that, wishing you all the best as you hold on or wait for the examination in that case. And I'm going to be wrapping up around here today, and God willing, tomorrow we're going to be coming your way again to continue with a discussion with some of the other subjects. So we've looked at public sector, we've looked at financial reporting. Tomorrow we're going to be getting excited into some of the other topics, some of the other subjects like financial management, management accounting, and then some of the other areas that you have to be mindful of to put yourself in the position to pass the examination. As I say always, please don't wait 3 days to the exam, 2 weeks to the exam, and think that you can take leave and do everything within that leave period. As you can see the breakdown of the subject, there's a lot to be done. And hence, you want to spread yourself across in the 12 weeks and then discipline yourself. And I can guarantee you, you will go into the exam hall, write the exam with confidence, and most importantly, pass the examination. Thanks for watching, and I'll catch you same time tomorrow, 1700 GMT, as we continue with our discussion for the March 2025 examination and beyond. Thanks for watching, and I'll see you tomorrow.